morning. You're watching The Market right here on 18 Hour with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash on the show. And we managed to flirt with that 18,200 print in the week gone by. Having said that, on a net basis, we've fallen about almost 1%, and this for the first time since March 13. The good news, of course, is that FIIs, they continue to remain buyers of India equities. In fact, we've seen buying come in for a 7th consecutive session. So FIIs clearly, as we highlighted last week, are feeling the FOMO and they're back with India markets. US markets, though, they managed to snap their 4-day losing streak ahead of a lot of important key data points which are lined up for the week ahead, which we'll highlight just shortly. But the big question is whether we are headed in for another week of consolidation, Nikunj, or is it going to be a breakout in store, and are we going to see higher levels from here?
I would bet on a breakout, a mild one, and I'll tell you why. Because the market has done very well in the month of April and May, and then we hit a pause button. That pause button also coincided with a lot of global news flow and a bit of a retreat in global equity markets. But Friday's session for Wall Street, I think, is very promising. And Friday's session has ensured that there is a lot of risk on capital in the world right now. And typically when the risk on trade at a global level is on, an outperforming market will always have disproportionate amount of benefits. So we've used the word FOMO. I think that trend is real and that trend is here. Allocations have just about started increasing in a market like India. The earnings season has ensured that you will be in for more upgrades rather than downgrades. Commodity prices are on the right side. So net, if you add up everything, I guess you are in for higher levels. We've consolidated, and in uptrend you don't consolidate for weeks, you consolidate for days, and I think that day-wise consolidation is behind us. And even on Friday, if you frankly take out the effect of HDFC Bank from the index would have looked very, very different. We're not talking about it right now, but I think the index would have looked very different. So I would firmly believe that the trajectory for the market is headed higher. I'll say it again, what I've been saying from last 1 month, it's time to stay bullish. It's time to stick to your long positions, don't create shorts. And I think this really, in a sense, is this rally, the summer rally of 2023, I think may really be the most strongest comeback rally, at least of this year.
Okay, so that's the expectation from the markets, perhaps a breakout on the charts expected. And just take a look at the kind of handover that we've got from Wall Street. It was a rebound on Friday's trading session. You've got the Asian markets as well, pretty much following suit, and that's the SGX Nifty for you. But let's also track earnings then and talk a little bit about what went by for the week. You had Coal India, Paytm, Marico, as well as Britannia. Those were some of the key headline numbers that the street was tracking. And I want to pinpoint two of them, Nikunj, and talk in particular about Britannia as well as Paytm. When it came to Britannia, it was pretty strong. It was all margin led this time around in terms of that beat, although the guidance was a little bit lower for FY24. And then there was Paytm as well. Loss came in better than expected, and the buyback as well has been completed.
So, Aman, Britannia will occupy center stage today largely because you had a howler of a number which came from Dabur, and markets, when the entire Goer, issue is there, the Britannia number in a sense become important. We've not got great numbers from HUL, frankly. So from the FMCG space, I think post Tata Consumer, this is the first big sizable company which has come out with numbers which are very impressive. One. Second, I genuinely feel that for a company like Britannia, worst of the margin picture is behind us and they've really consolidated enough. So in my book, Britannia now becomes an outperforming stock, and the underperformance what it has seen largely because of what is happening with Goer, I think markets should not confuse because Britannia is a professionally managed company. Second is Paytm, and I cannot say wow, but I would say good. Wow was last quarter, this quarter is good. So the trajectory to the trajectory and the path to profitability I think is very clear. Their growth I think is decent. Now quarter gone by there was a dip in terms of the disbursements and in terms of the size of that, but that I would say that markets would like to ignore that. Now in terms of in stock positioning, I think the bombed out level for Paytm is behind us. Markets have realized that the promoters, they're committed to make the company positive. So that one-time re-rating which happened, let's say after last quarterly numbers, may not be there. But I think markets would incrementally now start getting confidence into the Paytm stock, that the management is now walking the talk, and all the metrics now I think are coming through. The interesting bit would be that when the Reliance Financial share, which will get listed in the second half of this year, that would be competing with Paytm. So what really happens there? Will large amount of interest move away from Paytm to a Reliance franchise, or Paytm will move independently of what is happening? Paytm had a bombed out situation. That point of disbelief, I think, is behind us. So from a pocket of disbelief, it has come back to a level where markets now will recognize it for the earnings what it has. It has a large potential and big scope, but that one-time re-rating is over. So I don't think the stock is going to see an incremental jump based on these numbers.
In fact, in the last 52 weeks, we've already seen a 24% appreciation in that stock price. In fact, very categorically, the Paytm CEO, Vijay Shekhar Sharma, said that they're very much on the path to profitability. They aim to make Paytm cash flow positive, and the focus is going to be on quality revenues. They're betting on AI-first opportunities. In fact, you know what? Before we move forward, let's hear out what the managements of Britannia and Paytm had to say on the sidelines of their conference calls.
It will hover around the same, maybe, a percent here or a percent there. Won't make a big difference. The point is that we might have to make a few changes to pricing in certain brands and certain packs. So we don't want to become, only margin hungry and not continue our march on revenue growth, volume growth, and market share growth. So it has to be a balanced play, and that's what we are trying to do. And that's how we've, looked at getting the golden triangle every year. But I don't worry too much about volume. I'm more worried about the number of packs that we sell. So I would want to see aggressive growth as far as number of packs that.
We have not given a specific quarter, but we have said that we are very close to achieving cash flow profitability. And just to be clear, the way we define cash flow profitability is EBITDA plus interest income less capex. There is also in parallel improvements in working capital that we are doing. So if you notice over the last 1 year, due to improvements in working capital, and if you adjust for the money that we spend on buyback, we over the last year have actually added to our cash. If you look at the March 31, 22 number and the March 31, 23 number. So we have also in parallel improved working capital. But when we are talking about free cash flow, we're saying EBITDA plus interest income less capex. And we are very close to being able to do that. You only need.
All right, that's an eye on Paytm as well as Britannia. But the other key talking point then over the weekend was the annual shareholder meeting with Warren Buffett as well as Charlie Munger that we saw. And some key takeaways from the Berkshire AGM. It was a 5-hour long session actually, and what was keenly talked about over there was some of the points that have really worked out over the long haul, talking a little bit about AI as well, Nikunj, saying that old-fashioned intelligence works pretty well over AI, and though it will rapidly transform many industries, it won't tell you which stocks to buy. Are you nodding your head in agreement?
No, I'm just thinking that how classic wisdom always prevails. Yeah. Charlie and Warren came out, I think, 6 years ago, 7 years ago, and they actually predicted that Bitcoin is like rat poison and it will have a very bad end game. Nobody believed it. Everybody changed their view. Some of the bigger banks, in a sense, really endorsed the importance of cryptocurrency. And look what happened to Bitcoin. I mean, forget what's happened this year, but in general, how Bitcoin has lost its respect in terms of a go-to class, and every asset allocator was recommending their clients to go for Bitcoin. Similarly, right now, the latest buzzword is ChatGPT, AI. But ultimately, what really matters is that AI is nothing else but pattern recognition. We may do great things. Your steam engine changed the way how transportation was done, or mobile phone has changed the way how we communicate. Ultimately, those are enablers. They cannot replace human brain. And I think that is something which is coming from a man who's seen the world. Buffett, 90-year-old. Manja, 95
Buffett,
years old.
92?
92, yes, 2 more years.
Buffett, 92 now.
Yeah, Manja's nearing 100. Yeah. And, every time I look at them, I said, wow, man, I mean, what do they eat and what do they drink and what do they do that keeps them going? And then
McDonald's burger every day.
Exactly, exactly. So when I figure out what they eat, it's actually a burger, it's a Coke, and then you got, they always eat the candy, the C's candy what they have.
Yeah.
So it just amazes me that how an attitude and how the way they've really led their life. So hats off to them, and I really wish and I pray and I hope on behalf of everybody that long live Charlie and long live Warren Buffett. We did long live the king also over the weekend.
That also, but we are going to talk about that in just a bit, and don't worry, we'll show you all the highlights from that coronation, a historic one at that. But we'll get you glimpses in just a second. Let me quickly take it across to Anisha, find out what the global experts are saying now about India and where the direction of the world is headed. Anisha?
Well, the big global commentary, of course, came in from the sidelines of the Berkshire Hathaway AGM. But apart from that, there was important commentary coming in from U.S. Treasury Secretary Janet Yellen as well, wherein she talked about perhaps a constitutional crisis which might come to play if the U.S. debt ceiling is not raised come the month of June. Remember, this has been much talked about, the way the U.S. debt becomes due, and there is a need to raise the ceiling as well. Janet Yellen believes that if the ceiling is not raised, it will not only lead to a constitutional crisis, but there will be a contagion effect across all asset classes, and equity markets will not be far behind. So that's an important commentary coming in. Meantime, the U.S. Fed member James Bullard talked about how they're going to go with an open mind come the next Fed meeting. They are saying that they're going to be data dependent. So not talking about a pause at this point of time, saying that they're going to be data dependent going forward, as well as the Fed decision is concerned. Talking about what's happening across the European markets as well, the European Central Bank will continue to raise interest rates until the inflation is in control. That's the word coming in from a couple of members of the ECB as well. So overall, yes, inflation is ebbing, but nonetheless, the bankers and the policymakers continue to keep a vigilant eye on how inflation is moving.
That's a roundup of all the top global commentary. Thanks very much, Anisha, for highlighting all of those details for us, Aisha. Let's move on. And yes, of course, across the globe, we were focusing as well as King Charles being crowned as Britain's new monarch. But for now, let's focus on our markets then. And you've got the index, which wrapped up Friday's trading day at 18,069. You had the Sensex down about 600 odd points. Let's get in Kunal Bothra as well, joining in as Naresh Merani in just moments from now. And Kunal, what's the view on the index?
Long live the Nifty.
Yeah, absolutely. I think long live the Nifty and long live the uptrend for the indices. That's more important. So we've seen a first round of volatility coming back on Friday session, where the intraday charts of the indices, both on the Nifty and Bank Nifty, showed that there's some nervousness creeping into the indices at 18,200 mark on the spot level. So it may be termed as a good sign that the markets could be ready for some bit of consolidation. For the first time, I think in so many days, we've seen unwinding of longs on the Bank Nifty. Now that could actually be a good signal that we may probably get into a zone where the Bank Nifty may start to consolidate a bit, maybe underperform a bit as compared to the Nifty. And I think one of the major reasons for that could be underperformance from few large cap private sector banking names, especially with what happened with HDFC Bank and many of the large cap names on Friday's trading session. So I think on the back of it, it's possible that for the next maybe couple of sessions or for the next 1 week, the Bank Nifty may underperform, but net the bias and the view on the indices still remains to be strongly bullish.
Right, okay. Let's talk stocks then, Kunal. Not clearly the HDFC twins. What's going to propel us higher?
So I'm betting on individual names on the merit of chart, and specifically, the first stock is Bayer Glenmark Pharma, a classical breakout. The stock had shown over the last 2-3 months, breaking past about 450 levels, 500, and now on the verge of crossing about the 550 mark. So would suggest the Bayer Glenmark Pharma, 575 as an immediate target, 536 as a trailing stop loss. And United Spirits is also trying to show a closure of the gap which it created almost a month back, just around that 785, 800 mark. So I'm expecting this gap to be closed for United Spirits and a breakout to happen. Buy with a target of 825, 840, stop loss at 750.
All right, let's get in Naresh's take as well on the markets then. And Naresh, what's your take on the index as to where it could be headed after Friday's move? The fact that it's going to be an earnings heavy week and the Fed action now seems to be behind us.
So overall, the trend continues to remain up. 18,000 should act as a base. We saw a correction due to the crack in HDFC twins. If you were to remove it out, we did not see much of a correction as such. So overall, the stance remains positive. overall, even in the broader market, the strength continues to remain. So the view is we take a little bit of a pause around this 18,200, 300 mark before we start going higher. For now, till the time we don't break below 17,800, would stick to this view of maintaining a buy on stock specific. Index wise, it's a hold on Nifty. We'll wait out for Bank Nifty for a little more dip. Stock specific ideas will go more on the broader side, which is where I would be looking at stocks. One is a contra buy on Maruti. The stock has done nothing for a long period of time. Finally, the stock has started giving a breakout on the shorter term charts. Crosses that 8,800 mark, closed well on Friday. A momentum trade for the next few sessions. The stop loss at 8,800 and a target price of 9,500. Second is a buy on Ambuja Cements. After the whole fall a few months back, the stock got into a tighter and tighter range. 400 to 405 has been a resistance for this period of consolidation, the sideways contraction which it has going through. Yesterday on Friday, it tried to cross that 405 mark, closed well around 400. So possibly a short-term breakout could be in play here, a triangle breakout. A stop loss at 390 and a target price of 440.
Okay, couple of stocks there coming in from Naresh, betting big on Maruti as well as Ambuja Cements. But you know what? We were just highlighting King Charles and his coronation, and this is something that even Warren Buffett actually quipped about, saying that Charlie has two competitions today. But yes, King Charles III has now been crowned as Britain's new monarch in his service at the Westminster Abbey. Charles, remember, was the heir for 7 decades in the row and has now become the first king in over 86 years because of the long reign of the Queen. King Charles III, who has advocated for environmentalism and ills of climate change, introduced new customs such as vegan anointing oil and recycled ceremonial garb to mark his dedication to sustainability and biodiversity. In fact, the pageant featured around 7,000 military personnel from mounted troops to marching bands taking part in a parade rehearsed with minute precision. In fact, the state television, that's BBC, claims that over 14 million watched the live coverage worldwide. Now, that's some viewership number, Nikunj.
That's some viewership number. And that just tells you that, every time if there's a big event, well, it's back to basics. Go and watch television. And that's what I think a lot of folks did who were watching financial markets, that they were watching a lot of global networks to hear Warren Buffett and Charlie Munger. But yeah, King Charles, it's ironical, right? I mean, will they have to change the song now? Long live the Queen becomes Long live the King?
Very pertinent question, actually. Yeah. Wonder if that's going to happen or not.
Yeah, but it was certainly a ceremony worth watching with King Charles.
And Camilla's destiny.
Yes.
Not just,
really.
I mean, she's queen.
Queen, exactly.
It was never meant to
really
be
paid
Diana.
off. Absolutely. All right, let's move away from all the action in the UK, right back home. We spoke with Ravi Dharmshi, CIO of ValueQuest Investment Advisors. He spoke on the Indian market, saying that India has no choice but to grow when it comes to the manufacturing sector, as it generates more employment than the services sector. Let's hear out his take.
China wants to move away from manufacturing. Maybe it is because of pollution issues, maybe because they want to move their economy away from export-oriented to consumption-oriented. China wants to move away. Second is, world wants to move away from China in terms of their dependence, because of their over-dependence on supply chain terms on the China. And India has a huge populace that needs employment. And the kind of employment that manufacturing can generate cannot be generated by services sector. So we have no choice but to grow our manufacturing sector. Now, government is taking all the steps required to give the boost to the manufacturing sector. But it is not an easy journey. But we are already witnessing some early signs. So for example, in electronics, I think we are in mobile, especially within electronics, we have become net exporters. I think that's a huge benefit for Indian economy. So we had a structural issue because we always used to run deficit versus most of our trading partner. And the number 2 item after crude was electronics that we were importing. And if we can start within electronics, mobile was the largest component. So now if we can start that manufacturing locally, I think we have a very good chance of correcting that structural flaw in the economy. So I think beneficiaries of that, the domestic electronics manufacturing outsourced vendor is one place that really excites us. I think there is a long runway. These companies can continue to grow at 30-35% kind of compounded for a long period of time. And so yes, valuations are not so cheap from current earnings perspective, but I think the absolute size of these companies are still very small, and over a 8-10 year period they can really become larger.
Vishal joined us now, and let's take a conversation forward. Vishal, so what were you watching on Saturday? The coronation of the king or Manjar and Charlie?
King Charles at Berkshire.
Good one.
It's quite a moment. It's quite a moment actually. I mean, both are landmarks on their own. I think this was the first physical AGM after the COVID, if I remember it wrong, if I remember it correctly.
Yes.
Okay. So, for me, what struck out, Vishal, was that AI cannot replace human intelligence. Would you say that that was the big takeaway?
I think that was one of the biggest takeaways. So I think the world was, or probably the investing community was waiting to hear what Warren and Charlie had to say about artificial intelligence. They have been vocal about it in the past, but in a more formal manner in their AGM. I think they said what they've been saying all the while, right? That human intelligence is what it is, right? And artificial intelligence can definitely aid humanity, but as far as thinking and decision making is concerned, I think it's what human intelligence is all about. So I think, yeah.
Other, I guess, takeaway for all of us is that while there seems to be this chatter that the reserve currency nature of dollar would change, but Buffett is clearly saying that it's impossible because there is no other alternative. Now, history has told us that alternates always get created when there are imbalances in the world, and right now the American dollar is going through a big imbalance.
No, I agree with Warren here as well. So definitely there have been noises around changing the world reserve currency, and there have been issues with dollar denominated kind of stuff right over the years. But and of course, given the fact that the US economy has been through its own bad times and good times, so there has been noises about creating an alternative currency. But I think there's no alternative currency as of now. People have talked about making the Indian rupee as strong and probably taken to a place where it becomes a global currency of choice. But I think we are still far away from that. So dollar, as Buffett says, would still remain to be a global currency and a reserve currency for some time.
Charlie also says that value investors be prepared for low returns. I wonder why is he saying that? In India, is that the problem?
I'm sure. No, I think there would be a problem, I'm sure. So if you look at the nature of any games, including investing or cricket, right? If you look at the one-day international cricket scores for the last many years or 2 or 3 decades, right? For the team batting first, on an average, the average score for the team batting first has increased, right? So what differentiates the winner is the amount of luck that you have in a game, right? Everyone is skillful. So as far as investing is concerned, as the average IQ of investors has increased, as people have become more smarter, more wiser as far as the investing is concerned. So what really differentiates someone from others and what really creates that alpha, I think luck has a huge role to play over there. And that's the reason I think that's what Buffett is also saying, that going forward, given the fact that people have become smarter, there's no more information arbitrage that people can benefit from. There's no more edge that people can gain as far as information analysis is concerned. I think the only edge that remains is behavioral, right? So I remember Charlie saying that if you want to really do well as investors going forward, you have to be more rational, you have to be less dumb, right? So I think that is one big takeaway for me as far as this point is concerned about value investing becoming tougher for investors as a whole.
And I think, Vishal, the same old saying that they've repeated time and again that stay the course, right? In fact, they jokingly said we don't understand the iPhone, but we understand the consumer behavior, and we'll continue to stick by with all our investments.
I think that's what Warren and Charlie are all about, right? If you remember Charlie talking about estate planning, someone asked him about what advice do you would give for estate planning, and he said, just hold that goddamn stock, right? So they have been talking the same things for the last 30, 40, 50 years. The issue is that since they talk stuff that is so simple, right? People don't really, or most people don't really adhere to that. People want complexity in their lives, in their investing lives, right? And the simplest way to be a good investor is to keep things simple. The simplest way to be a good investor is to do less dumb things. The simplest way to be a good investor is to have a long-term horizon. They've been talking about all that stuff for many, many years. People who have followed that have benefited from it. People, most of them who've not followed that because it's so simple, have actually failed in their investing journey. So as simple as that.
Vishal, there was a specific mention on how the US government or the US administration has handled the current regional bank crisis. Now, there is a bit of a yes and a no. It was need of the hour, but it was not handled well.
I think there would be comments everywhere, and everyone has a different take on things, right? So, given the way the bubble has been created over the last many years, ever since the financial crisis, and easy money policies have been used by central banks globally to foster liquidity and to create those asset bubbles, right? So I think the level of complexity that we are in as far as money is concerned, as far as currencies are concerned, as far as liquidity is concerned, I think it's not difficult. It's not easy to manage, right, for anyone. So there would be commentators on how the US government or US central bank is handling the crisis. I think it's only with time that is going to tell how things are going to pan out. We are, I'm sure, given the way the money has been printed in the last many years to ward off crisis, even in 2020 COVID meltdown, right? So we may be in for a big crisis in the future, but nobody knows when it's going to happen and how it's going to happen and who's going to get impacted. But definitely we are in that situation where times are going to be tough. And again, Charlie, I think, has reiterated in multiple interviews that he's not so optimistic as Warren Buffett, right? He is concerned about how the world has panned out, how money policies has panned out, how people have been used to easy money and asset price inflation. So I think times are going to be tough, and that correlates with the idea that investors need to brace themselves for lower returns going forward on average.
Vishal, so when are you heading to Maha next? We were just chatting whether you have already or not.
No, I have not been. My idea probably when my thought was to go next year when Charlie turns 100. Yeah. So I was one at the Daily Journal meeting once, and I've never been to Omaha, so probably next year for sure.
I asked Charlie a question once, right? That was 4 years ago.
What?
No, I'm saying you asked Charlie a question.
Yes, that was 2018. That was 2018.
We try you, Vishal. How are things otherwise? What's the new thing on your agenda for this year?
Nothing, just doing the same things as Buffett says, right? As far as investing is concerned, I adhere to what they say, just holding the goddamn stock and holding the goddamn portfolio that I have. As far as my work is concerned, just teaching the same things to people about how to invest sensibly, how not to lose their hard-earned money, right? We are in a world which is getting very noisy now. Over the top, we have artificial intelligence that people think is making life very easier. But there's no alternative for human intelligence. There's no alternative for human thinking and decision making. And in this time, people who can think well independently without the help of artificial intelligence, I think are going to do well over a long period of time. So I have that optimism about India. I have that optimism about human thinking. I think things are going to pan out well. So that's what I'm working towards as well.
You mastered the art of behavioral finance, and you always tell how to invest your hard-earned money. But the question which I get as a fallback is that please ask Vishal that we are ready to work hard. How can we earn money?
See, it comes down to where do you want to earn money from? Do you want to earn money from the stock markets, or do you want to earn money and put your hard work into the work that you're doing outside the stock market? So my advice is to people is that you should not be looking at stock markets to make you rich unless you're a professional investor who's managing other people's money. Most people are not professional investors, so they should not look at stock markets as a way to make money. They should look at stock market as a way to create long-term generation wealth, right? And it happens over a long period of time. So whatever I say right? It's very difficult to change people's attitude towards money because most people think stock market is like it's a easy way to make money. But I think history has proven time and again that it's not the case, right? But people who have treated stock market as a way to create wealth for themselves, for the generations forward as well, they have done really well. So that's been my lesson to everyone, I think. So you put your hard work in terms of earning money outside the stock market, and then you save well, then you invest well, and then you do the hard work of holding your investments. You're holding your good investments for a long period of time. If you can do that work well, which sounds simple, but it's not easy, I think you will create adequate wealth for yourself over the next few decades.
Yep, and spend wisely as well. Vishal, great to have you on the show today, and we really hope you get to go to Omaha next year.
Hope so. Thank you so much.
Okay, good chatting with you. Let's take a very quick break. The SGX Nifty is indicating just a very flat start for us, just mildly in the green actually. We'll take a break. When we come back, we'll talk about all the stocks on your radar this Monday morning.
Welcome back. Let's move right on to stock-specific news then, and an ET Now news break has been confirmed. The Aditya Birla Group firm has entered into a definitive agreement to acquire 51% stake in TCNS Clothing, which owns a lot of ethnic brands. Let's take it across then to my colleague Vamakshi, who joins in with all the contours of that deal. And Vamakshi, the news break has been confirmed.
Well, yes, Aditya Birla Fashion and Retail ABFRL is looking to buy 51% stake in TCNS Clothing for 1,650 crores, and this would be via a combination of open offer as well as acquisition of promoter stake. Now, post the stake purchase, TCNS is expected to merge into ABFRL, wherein 11 shares of ABFRL will be given for 6 shares of TCNS. This, in fact, the merger ratio that is derived is actually negative for minority shareholders, as it implies a share price of almost 393 per share versus the current market price of 520. As far as ABFRL is concerned, the merger is also expected to lead to a share dilution of almost 6%. Now let's assess the impact on both these counters. Well, it happens to be positive for ABFRL as the transaction is happening at 14 times FY24 EV to EBITDA, and this, when we compare to successful apparel retailers, they actually trade at valuations in excess of 30 times, so it's appearing to be at a discount. Debt should not increase in their opinion given the pending inflow of almost 1,450 crores from GIC. However, when we look at TCNS, the deal is negative for them as the company is valued at a discount. The minority shareholders would in fact be better off by tendering their shares in the open offer, and in fact the implied merger value of 393 is coming at a discount of almost 7% even when we compare it to the 52-week low. So largely what we're gathering is that the deal is positive for ABFRL but negative for TCNS Clothing.
All right, let's also bring on board then Dipan Mehta, who's joining in on the show to share with us his outlook on the markets as well as some individual stock recommendations. Hi there, Dipan. Good to have you on board. Why don't we start off by talking then about what happened when it comes to Britannia in terms of the kind of quarterly earnings. If you had to compare it to some of its other peers within the FMCG space, it definitely stands out as a shining star, at least when it comes to earnings.
Yeah, good afternoon and thank you for having me on your show. Yes, I think Britannia has been an absolute outperformer within the FMCG space, and they have done so consistently for the past several years or so. And steadfastly, they have gone about increasing their manufacturing plants and their retail footprint and really taken on the Parle, which was the market leader, and increased their market share as well. It's still a company under transformation. They want to go from biscuits to complete food company. And that's something which the investors are keenly following. Valuations have been on the premium side, but looking at the kind of numbers which keep coming through from Britannia, perhaps well justified. The only fly in the ointment is the unsecured loans which the company has given to group companies, and that always, has a bit of a cloud on the company. That could there be any delays or any corporate governance issues over there? But by and large, I think there have been no such events. And the company is earning very good return on the money which they have lent to group companies. But I would say that if you're invested in Britannia, remain invested. This is a company which is still in secular growth mode at a time when most other FMCG companies are operating in very mature categories and showing flat volumes. Here is one company which is still able to manage double-digit growth rates, at least on the volume front.
Okay, Dipan, just stay with us. I'm going to get right back to you. In fact, take your opinion on Paytm up next. But here's Hemang Jani telling us why is it that he likes AB Fashion and Zomato.
The overall consumption, story is not that bad. Yes, because of either raw material changes or operating costs, the operating numbers have not been great. So I would rate Aditya Birla Fashion as one of the companies which will remain there as a top company, in the retail space. And the stock has corrected. So typically you should be buying into such franchise when the sentiment is not good. So I do think that names like Aditya Birla Fashions, Trend should do well for investors even from current price level. When we look at the new age companies, recently we have initiated buy call on Zomato and Paytm, and the reason why we like some of these companies is that on the one hand the market caps have actually come down by about 50-60%. And when you look at the actual underlying operating performance, it has shown a lot of improvement. And we think that some of these companies, once they reach a certain level of operating profit or EBITDA, can actually grow very fast.
Right. Dipan, have to talk about Paytm and especially the commentary this time around from Vijay Shekhar Sharma, reiterating not just that their losses have narrowed, but the fact that they are saying that they're going to maintain profitability and focus on generating free cash flows.
Yeah, I think ever since listing of Paytm, that's been the biggest bugbear with investors, that when is the company going to turn profitable? And now I think that particular event is very well in sight. Very impressed with the way they have curtailed the expenses. The value proposition of Paytm remains strong as ever. And some of the innovation which they have done, like the sound box, is really, I think, quite impressive. And that helps them grow the merchant network. And then it's a platform. More and more people there are on the platform, then they will look at other services and products offered by Paytm. And I think the strategy is clearly playing out, because if you see the kind of earnings which are coming in from organizing loans or from some of the other financial products, is steadily growing. And that is covering a lot of the losses on the basic payment business. So I think the entire, company, its strategy, its core business performance is all playing out pretty well. And at some point of time in the near future, you could see a quarterly profit. And I think that could be a very important inflection point for the stock as well. It's a one of a kind of a story, and will always trade at premium multiples. So I think generally view is positive on Paytm. And going forward also, it can now, I think, a good bottom has been formed. And going forward, it can turn out to be an outperformer.
There you have it. That's a view coming in on Paytm. But we've got lots more stocks that we'll be highlighting. These are the stocks on the editor's radar. We're handpicking two large cap names. And let's start off then in the banking space with IndusInd Bank. Jefferies has got this stock on their radar. They maintained a buy rating, a target price at about 1550, highlighting that the CRO's resignation shouldn't warrant any price correction.
Unfortunately, with IndusInd Bank, even though they're delivering, markets are not enjoying that comfort. IndusInd Bank was trading at 4 times price to book before the IL&FS crisis. Post that, markets have lost their comfort, so to speak, because what they had shared, they've not delivered, and now it's taking their time to perhaps get that confidence back. Typically, when a risk officer of a bank, where you know that markets have been unhappy about the numbers in the past, they resign. Markets say, "Arey, kya ho raha hai? Is there something much more than that meets the eye?" And the market reaction, I think, was visible in last 1 hour of trade on Friday. I think IndusInd Bank is a cadre-based organization. We must recognize that some of the organizations like IndusInd Bank are built to last. So an individual may not be having such a large impact. It is not that HDFC, it is not that there is a sudden exit of HDFC Bank, Aditya Puri from HDFC Bank, that it really changes the vision. Here's a routine risk officer and risk management in any bank of the quality of IndusInd Bank, which is process based. An individual really cannot have such a large impact. So because markets don't have large kind of an comfort, it's a high beta stock, we saw this kind of an sell-off. I expect the stock to bounce back because the market reaction on Friday was overdone.
Yeah, unwarranted according to Jefferies as well. Let's move on then and discuss Cipla. It's going to be in the spotlight come May 12, especially because it will be declaring its quarterly numbers. And the street, Nikunj, seems to be penciling in that it could be a pretty strong quarter.
I think markets are underestimating the potential of Cipla's domestic business. I know it's such an expensive stock, but in a sense that the franchise what they've built and the kind of market share what they've gained and the kind of growth what we've seen in the domestic pharma business, I think is quite extraordinary. Avan, while we always think that US in pharma means US generic, we must recognize that the real bull run isn't in the Indian economy. In America, they have to cut corners to bring the cost down. So the US generic business will always be under pressure. But in India, it's very simple. We will be consuming better medicines. We would be consuming better quality healthcare. Cipla is a force to reckon with. They've got a very large portfolio both in diabetes and in the chronic care. And I think they've done a wonderful job in terms of maintaining their margins as well.
And
so it's
flu season is rampant.
Flu season is rampant. Their portfolio is quite decent. I mean, the company stands for a cause and for a purpose. So I would like to say that Cipla for me is more like a Rahul Dravid. It may not be very exciting if you buy the stock, but it's going to be stable.
Yeah. Okay, that's the view coming in, cricket analogy and all that. IndusInd Bank, Aisha, as well as Cipla, stocks on the editor's radar.
Oh, yeah, absolutely. Kunal, let's talk about the pressure points from Friday. IndusInd Bank and the HDFC twins. Do you think they're going to make a meaningful comeback, or will they still remain under pressure?
I think they should be under pressure for some more time because we've seen for the first time, as I said, that we've seen an unwinding of contracts on the individual stocks, large cap names, and that generally takes a lot of time because when you see such kind of sharp impact in terms of prices, whether it's even if I can probably add maybe Federal Bank, it was the impact which it created, which all of these stocks created on the Bank Nifty, and that impact could probably dent the prospects for Bank Nifty over the near term. So, I would not expect very immediate kickoff momentum for these stocks or a sharp V-shaped recovery for these names. These stocks have already done pretty well for themselves, as a basket overall for the private sector names over the last 1 month, specifically from the March lows of 38,500 for the Bank Nifty. So I think it would be more of a cool-off time for the private sector banking names. I think traders should not be in a hurry to try and jump in the stocks just because they've corrected 5%, 7% on average. You have to wait out for maybe another 3%, maybe another 5% correction, and then could probably go in for opportunities on the contra side.
Okay, before we move forward, Dipan, just a quick call from you. I mean, IndusInd Bank with the CRO resignation or a whiff of that and the way the stock cracked off on Friday, or for that matter, that MSCI adjustment playing out for HDFC Bank, would you be a buyer on such decline days? Or have you bought already?
Yeah, we are more or less well invested in these two companies. But yes, I think positive on both IndusInd Bank as well as HDFC Bank, and maybe HDFC Bank is going through its pains as a merger because of the merger. But once that is over and done with, I think again you could see a very secular growth coming through from HDFC Bank. And I was pretty impressed with HDFC's numbers as well. And of course, eventually that will start to flow through HDFC Bank, the merged entity. So on the whole, I think it's a good stock to have as part of your core holdings. Coming to IndusInd Bank, I completely agree with Nikunj that it's a high beta stock. And, ILFS clearly exposed its lending practices where NPAs shot up. But there's been a change of management since then, and the new management has been steadily trying to improve its systems and processes to ensure that such a repeat situation does not arise. But the underlying sectors to which IndusInd Bank lends to, that is vehicle finance, microfinance, and to the jewelry industry, those are intrinsically quite risky. So, one needs to keep in mind that there will be some certain degree of volatility in IndusInd Bank's earnings, especially when the NPA cycle turns. But valuations are really attractive for IndusInd Bank. It is trading at huge discount to its maybe 10, 15-year type of a price to earning multiple averages. And that's because of, the past, these are, I would say, the last 2-3 year track record of the company. So, I mean, if you're invested in IndusInd Bank, I would remain invested, but I think there are better choices within the banking industry where banks are performed even better on a consistent basis.
Stocks, and is it a coincidence that you own all 4 stocks, or are we only discussing stocks which you own? Dipan?
No, I have a very large portfolio, having been around for a long time. And, that's the reason why we end up owning so many banks. And actually, when you look at the entire spectrum of stocks in the country, and you want to go for secular growth stories with a wide footprint for growth, then your obvious choice has to be banks. Also, banks have a very large weightage in Sensex Nifty, which if you want to benchmark yourself against that, then you have to have a high proportion of your ownership in such stocks. And thirdly, I think by and large, there is a lot of corporate governance comfort when it comes to banks. They are highly regulated. And on the whole, I think their ROIs also are pretty decent. And at this point of time, valuations also are quite reasonable. I mean, Axis Bank, ICICI are available at very reasonable valuations. As the HDFC Bank, I think we bought at much higher price to earnings multiple. So there are a lot of choices. And at the same time, as I said, I think the consistent growth in earnings seems to be possible for next 2-3 years or so.
I'm going to shift gears and talk about IT. Dipin, at what point in time IT becomes what banks were in 2021? 2021, nobody liked banks. Everybody was worried about the impact of COVID. Everybody was worried about what essentially will happen to their balance sheets. But those who bought banks in 2021, they hit a home run in 2020 to 2023. Are we reaching that point in IT where there is a lot of disbelief, nobody likes them, and it's time to now pick up your bargains?
Yeah, Nikunj, you're right, but they're not really cheap as well, no? I mean, if I want to strategize for IT for the next 5 years or even longer, clearly my preference has to be for mid-cap IT, the likes of Persistent Systems or Tata Elxsi, Coforge, those sort of companies which have really grown significantly last 3 to 5 years, have shown solid 20% plus type of revenue growth rates and steadfastly maintain their operating profit margins, manage the entire environment and also the kind of attrition pretty much well, and created very strong niches for themselves. But these companies are still trading at very high P multiple, premium to the larger ones like Infosys and Wipro, HCL Tech Mahindra. So while you get the comfort that maybe 1 or 2 quarters may still be bad for IT companies, but then it's not that they're really cheap. And way back in 2020, banks were really at attractive P multiples as well. So it's just kind of a wait and watch and see how this thing plays out. And maybe if you find that the stocks, these mid-cap stocks go nowhere for maybe a year or so, and earnings go up by 25% or so, then that could be a good entry point. I would like to just buy these mid-cap IT stocks at slightly more reasonable price to earnings multiples, so there's margin of safety.
Tech Mahindra be the dark horse, Dipin Mehta. There's a change of guard there. This is one company where the intent of the promoter group is to turn it around. They've turned Mahindra and Mahindra. They've turned around Mahindra and Mahindra Finance. They've turned the auto business. Tech is where they have a scope. It's like work in progress. The company is not lived up to the Mahindra brand. Could next 5 years be different for Tech Mahindra?
See, I think I'll wait for the results to speak for themselves. They are in the telecom space, and we are seeing that 5G will eventually drive tech spending within the telecom space, but that's not visible so far. And the company clearly has lagged its peer group. So I just like to wait for more consistent numbers, industry outperformance before I look at Tech Mahindra again. As I said, right now, the focus is on a lot of the mid-cap IT stocks. We're trying to find the next, maybe Persistent Systems or KPIT or Tata Elxsi for that matter, because really these mid-cap IT companies are creating very strong niches and they are able to compete very well with the large-cap IT on their turf. Even as the industry matures, I think there is clearly understanding that mid-cap IT stocks do bring value to even the largest or the Fortune 500 customers. And mid-cap IT, I think small acquisitions, $30-40 million orders, very specific position in a particular vertical, could be auto or could be IoT or AI or any specific niche vertical also ensures that they grow at 15-20% thereabout top line. And that's what we're looking for in a company. I think more and more the larger IT companies, the base effect is drawing them down.
Naresh, one of your favorite stocks, Aditya Birla Fashion Retail. Why it is not going higher?
So it used to be a favorite, finally
you sold it,
booked out of the losses.
You never told us.
I think I told it before also, but the fact is now the stock after that also sold it in a loss at 300 odd levels and on the way down. Technically, the stock went through a one-way downtrend in the last few months, which was surprising. Even now, the stock is available at the same prices as it was pre-COVID. So technically would wait for a turnaround, and I'm not afraid to getting back in. whenever the stock has turned around. So out here, the risk reward is still okay, given that the 200 price was there pre-COVID, the 200 price was there in 2016. It has been a stock which has not delivered. There were many expectations. So for now, the last bottom is at 200. I would wait for a tick about 230 to start getting bullish.
Okay. I'm going to change gears and move back to a repetitive question, which is on HDFC Bank. Kunal, let's take HDFC Bank out of the equation. If you take that out of equation, then how are markets looking?
Yeah, even if you take you include HDFC Bank, the markets are still looking very attractive and positive for itself. We've seen a very good recovery for the index from the last 1 month. And if you include HDFC Bank, then it just adds more flavor that the large cap stocks in the last 1 month have been more stronger as compared to what has been earlier. So, just to give a different texture, that in the last 1 month, the likes of ICICI Bank, the earlier favorites in the last run, that is in second half of 2022, from the September lows of 2022, ICICI Bank, IndusInd Bank, these were top performers, and even SBI were top performers in the second half of 2022. Surprisingly, this time around, you have the likes of Kotak Bank, you have HDFC Bank. So if you exclude Friday's price action, they had actually done exceptionally well for themselves, coming very close to their respective 52-week as well as lifetime breakouts. And that added the flavor for the markets as such. Now look at it this way, that most of the other PSU banking names which were doing cartwheels in 2022 in the second half, they are most of the stocks are nowhere close to their 2022 highs for themselves. There is a margin of at least another 10-15%. So this move which we've seen in the last 1 month was more dominated as well as led by large cap names. That makes the setup more formidable as compared to what was in second half of 2022.
Naresh, wanted to get in your take as well on some of the stocks that saw a breakdown in Friday's trading session. What's the outlook on BHEL, and have you had a look at the charts of a Dabur?
So BHEL is still interesting. The stock had seen a very sharp move previous to this. The stock saw some bit of this correction due to some notification around coal plants. Technically, the last breakout was around 78, 79 levels, which is where the fastest move came from. So I would expect it to pause around 78 levels. I would be actually looking at a buy around 78, 79 and keep a stop loss below 76 and expect a bounce back again towards 90 levels. So positive on BHEL. Also, the fact that the whole capital goods segment has done really well. BHEL was a laggard, tried to catch up and again has taken a little bit of a dip. So risk reward trade on dips to 78, 79. Dabur is something which I'm not really interested in. The whole FMCG pack has seen very different moves. Some stocks are hitting 52-week highs, some stocks are closer to 52-week lows. So there is no structural trend in the sector as such. And in that, Dabur has been a disappointment over the last few months. The stock is back to the prices where it was a year back. Also, almost the whole return from the COVID rally, which started in the stock, has been negated now. So not looking at it, a relative underperformer. There are better choices available in the FMCG pack as well.
Okay. I just want to look at the numbers which came out from Britannia, because numbers came on Friday. We've discussed Britannia extensively, but these are good numbers and the margins are expanding. Guys, remember, margins have expanded for Tata Consumer. Margins were looking okay for Britannia. Dabur, not so great because of their focus on rural economy, which in a sense has been a bit of a struggle. There've been ONDC. Now this is something which is path breaking. While there are banks which will benefit, there are merchants who would benefit. What happens to Swiggy and Zomato? There are a lot of screenshots which are flying around in social media and WhatsApp groups that suddenly the ONDC network, if you order a burger, it is 30 rupees cheaper.
Yeah, that's right. I think that certainly does open a risk factor for Zomato. But it also opens an opportunity as well, because on the ONDC, as I understand, you still need delivery partners. And maybe Zomato could offer just its delivery services over there. So I think it's a very volatile and fluid situation. And the success of ONDC also needs to be tracked very closely, because quality assurance is a big factor on ONDC, which other platform companies, be it Swiggy, be it Amazon, do offer, and the comfort level is higher with such platform companies than newly established ONDC. So I think it'll go through its phase of maturity. It'll go through its phase of understanding and acceptance. But for the time being, I think Zomato and Swiggy are going from strength to strength. It's a fabulous duopoly, and they are changing habits as far as consumption is concerned. Eventually, it's going to become more and more mainstream ordering food from outside than cooking at home, especially with the millennials and the Generation Z. So I'm still quite positive on Zomato at its present valuation. But yes, you have to keep an eye on all the disruptions which are taking place within the sector. So, I mean, Zomato was a disruptor itself. Who knows, it could get disrupted by something else like ONDC. And it's not that you're going to bet the bank on a stock like Zomato. It's just that you want to have a small position in it because eventually, I think if they're able to show profits and go fabulously in the black, then this stock could be a multi-bagger over a 5-10 year period.
Let's say if you have to bet the bank or have a very high disproportionate allocation for next 3 years, what are those names where you would say, look, the index weightage is 5, I'll keep 10, or I've had a 5% weightage historically, I'm happy to make it 15. What are those 2-3 names where you think you want to be overweight or have a disproportionate amount of weightage?
So, Nikunj, first we have to have a very strong disclosure in place that if I'm going to say these names, then I have a personal positive bias for these companies. They're not recommendations for investors to buy, but at least we are putting our faith in these companies as of now. So on the top of the list is Larsen & Toubro. And you've discussed it extensively, so have I. We need not go into the reasons except to say that it's in a fabulously sweet spot. And with the way the capex cycle is playing out, elections down the line, government spending going up, this is one company which will benefit significantly from whatever is happening in the environment. A lot of value being created in the subsidies as well. So this is like, and I would create it as among the core holdings. The second company I think which comes to mind is Cholamandalam. We've been consistently following this company for several years. Very impressed with the way they handle the ILFS crisis and thereafter the COVID crisis. And it's a fabulous lender, very good systems when it comes to managing the risk. Compare them with Shriram Transport and M&M Finance, and you will realize how good they are in terms of managing their risk. The third company which comes to mind is Eicher Motors. Again, we've discussed it extensively. We like the premiumization story which is taking place within the two-wheeler space, and exports is a huge opportunity for Eicher Motors. It's not as much being, I would say, the threat of EV is not as severe for Eicher as say for Bajaj or TVS or Hero MotoCorp for that matter. And Eicher, of course, has its own plans as far as EVs are concerned. So that's the third company that we are quite positive on. And I can go on. There's Praj Industries that we like a lot, given its position, and the ethanol blending program is going from strength to strength. And massive capacities need to come up as far as distilleries are concerned, and that's where Praj has a very important role to play. So I think like that, our basic preference is capital goods, banks, automobiles. I think these are the three engines that, or I would say verticals, which we are quite optimistic on. We're trying to find the best companies within these three industries.
Right. Okay, Dipan, stay with us. Lots of stock ideas you've given our viewers. So we're going to just quickly take it across and talk about Go Fashion's numbers and muted Q4 actually for the company. Gautam Saraogi, the ED and CEO, joins in to talk about the way forward for the company.
See, usually for us, Q3 is the best quarter in the year because of festive. And Q4, immediately after festive, is usually the weakest quarter for us. So the fall in revenue from Q3 to Q4 is very normal in the normal course of business for us, in our type of business. So the fall is genuine, and it happened even pre-COVID. As far as slowdown is concerned, there is a slight slowdown in Q3 and Q4, which we are seeing that there is an improvement in April onwards. See, the 8% market share was based on a FY20 number. We are, over the next 2-3 years, we want to get to at least a 14-15% market share. We would at least want the single-digit market share to go into double digits. So 14 to 15% is going to be our aspiration number over the next 3-4 years.
Let's actually look at in the pre-open session where HDFC Bank is, where TCNS Clothing is. Now, Look, Itina broke the story that Aditya Birla Fashion will acquire TCNS clothing. But in a sense, the fine print is starkly different than what we were anticipating because it's a share swap. In a share swap, the equity of Aditya Birla Fashion will get diluted, and shareholders of TCNS, they will get shares of Aditya Birla Fashion. And the deal has been done at a disproportionate discount to what the Friday's closing price was. So I think rather than selling it now, one is better off holding the stock. This will also lead to some dilution for Aditya Birla Fashion. Aditya Birla Fashion in the past has been a company which is in a sense trying to move into a lot of formats. And this is where I think markets are also realizing that what are they trying to do? They've got multiple platforms, multiple businesses, all of them have high growth potential, but somehow in my book, I think the focus for this company is missing. It's Aditya Birla Group brand, great franchise, strong, formidable brands, but are they spreading themselves too thin? Then I just wonder, are they spreading themselves too thin? I look at Trent and I say, wow, look at the way how they are running West Side or taking their brands higher. But Aditya Birla Fashion is just moving into everything.
And Akunj, you look at Trent and you say, wow, but you look at the P multiple also and you say, wow again. It's trading at significantly higher P multiple. I don't know whether the growth rates, although they are superior, justify that kind of price to earning multiple. And, we have seen this play out within the retail industry with DMart as well, where valuations were absolutely skyrocket at sky levels. And then as the growth rate started to slow down, we have seen the stock underperform. And therefore, P multiples also eventually compress, although earnings have been pretty much steady 15-20%, maybe slightly higher as well. But if you ask my opinion, I think the best way to play retail is through specialty retail companies. And you spoke about one of them just now, Go Fashion. There are many companies like this. I think 7-8 companies. Go Fashion is there. Then there is Manyavar. There is Metro Brands. You could add even Landmark Cars to it. Ethos. I think all of these companies, the common thread is that they are focused on a specific product category. There's a huge runway for growth for them. They just have to expand their network. The balance sheets are strong and they can support a network expansion. And we are seeing that they are ahead of the changing consumer trends, preferences, which is why I think their growth rates will be significantly higher than the likes of Aditya Birla Fashion or Shoppers Stop or even some of the other retail companies. Also, they are in highly value-added products, trying to build a brand as well and create a moat for themselves. But of course, I think these companies are also pretty much expensive. I think that's where investors will find the next group of winners within the retail space, and not large format department stores, which are going to be competing heavily against the online players as well. I know that these companies I mentioned also have threat from online players, but their position is such that I would say the threat is significantly less than the likes of some of the large format companies.
Let you go on that note. Thanks so much for taking time out and joining in and sharing with us your outlook on the markets as well as those individual stock recommendations. A quick check-in on the pre-open rates around the 18,100 mark for now, and you've got the Sensex up about 60 points at 61,100 levels. But let's find out the mid-cap strategies from our chartists. What is it that they're banking on this Monday morning as we kickstart a fresh new week? Naresh, what's on your radar?
That would be a buy on IEX. The stock has given a short-term flag breakout after making this huge recovery from 130 levels. The stock has continued with the momentum. A strict stop loss at 154 and a target price of 175.
That's at 175. Kunal, what about you?
Well, I'll go with Metropolis because I think that stock has confirmed a breakout on short-term charts. It's a classical breakout, more of an inverted head and shoulder breakout after a rounding bottom or a base being established for Metropolis at the 1200, 1220 levels. So I think it could be an interesting chart prospect for the near to medium term. Would suggest a buy with an initial target of 1335, stop loss 1260.
Right. Okay, and on to some tragic news this morning. And multiple people were shot dead at a mall near Dallas, Texas. A gunman killed as many as 8 people and wounded at least 7 others. In fact, the shooter was also killed by the police soon after. Another 8 people have died after a car struck a group of homeless and migrants. The incident took place in the city of Brownsville near the Mexican border, and at least 5 others were severely injured in the same incident as well. Also, the head of Russia's Wagner Group appears to have ditched plans to withdraw his forces from Bakhmut in eastern Ukraine after receiving promises overnight that they would get all the arms needed to capture the devastated city. And crypto exchange Binance has resumed Bitcoin withdrawals after a brief closure due to a congestion issue. The exchange says it is currently working on a fix until the network is stabilized and will reopen Bitcoin withdrawals as soon as possible.
Shifting focus then from news back home, as many as 21 people have lost their lives after a boat capsized off the coastal town of Tanur in Kerala. The NDRF rescue teams have been deployed immediately, and the incident took place in the Malappuram district of the state. Officials indicated that search operations are still underway. Meantime, nitty-gritties from the IPL world, as a last ball thriller helped the Sunrisers Hyderabad mark a victory against the Rajasthan Royals. The Sunrisers stole the match with a 4-wicket victory, and with this win, the Sunrisers have edged up to the 9th position on the points table. Despite the loss, the Rajasthan Royals continue to nestle at the 4th position, notching 10 points from 11 games. And India's ace athlete and javelin thrower Neeraj Chopra began the Diamond League title defense with cruising with a throw of 88.6 meters. The 25-year-old Chopra won by a very small margin as his Czech counterpart finished second with a throw of 88.6 meters. Do remember, he also bagged the final trophy in Switzerland just last year.
And let's move on, get you all the buzz from wallstreet. Indian specialty chemical stocks, SRF and Gujarat Fluoro are in the spotlight as Chinese imports of a key drug find their way back to US after a break of almost 7 to 8 months. What is the buzz here? What's the khabar? Samit joins in for more. Samit?
Well, SRF and Gujarat Fluorochemical, both these car stocks would remain in focus because HFC 125, which is a fire suppressant agent, now the imports of these products to US from China has been on a rise. Now, after a break of nearly 7 to 8 months, this product has been, more imports have been coming in from Chinese to USA, and this product was one of the key money spinners for Gujarat Fluorochemical and SRF for the past few quarters. Now, imports have been increasing. In fact, Chinese exporters have been still making money even after the 277% dumping duty that has been imposed by USA on China. And given the fact that they're still making money, the imports are expected to rise further going forward. Now, along with this, the demand for this product in USA has been falling because HFC 125 has, as its global warming potential is nearly 6 times more than that of HFC 32, and hence clients are preferring the latter product more going forward. And in 2023 also, if you see, the USA government has reduced the HFC carbon quota by around 33%. Now, given these both factors, the demand for HFC 125 is expected to fall further going forward, and given the fact that Chinese imports are rising, the prices will further fall for going ahead for this key product for SRF and Gujarat Fluorochemical. In fact, analysts believe that the peak of profitability for SRF and Gujarat Fluorochemical has passed behind in the 4th quarter of FY23, and going forward, the profitability could be impacted because of falling prices of HFC 125. So keep an eye out for these two stocks.
Thanks very much for giving us those details. Let's move right on and get you a sense as to what the index calls are from our chartists this morning. What are they advising after what we witnessed in the week gone by? Let's find out. It seems like it's tilting towards a hold call. That's what our chartists are advising. Naresh as well as Kunal. Remember, we fell for the first time by over 1% since the 13th of March. That's the consensus call on the Nifty. The Nifty Bank was certainly weighed down by the HDFC twins last week, and the calls this morning, well, it's the book profits, buy and hold, so no real consensus call coming in on the Nifty Bank Index this morning.
Okay, just getting set for some of the buzzers in trade, and Aditya Birla Fashion, that's seeing a bit of a knee-jerk reaction. They're looking to buy 51% stake in TCNS, which is going to be a share swap. Although the stock started off lower by 9.5%, from there it's just recovered a smidge, but down still about 7.5%. And TCNS Clothing is now down 16.5% as we speak. Paytm, after their commentary, they are going to be free cash flow positive in the near future. That's the word coming in from the management. A very tempered reaction there, although the loss as well has narrowed in the quarter gone by's numbers, about 0.7% higher for Paytm as we speak right now. BEML, the government is going to be inviting financial bids for a 26% stake sale soon. BEML holding up 1.25%. And then there is Electra Green Tech as well, which came out with its numbers wherein the net profit has come in higher by 54.5%, although the base is much smaller there. Electra has gapped up about 7% as we speak. Blue Dart, and the numbers have been very disappointing. The PAT has plunged by about 50%. So that's another stock which is something that we're keeping very closely on our radar. It's really news specific this morning as it continues to be. We're at the fag end of the big earnings season. That's going to pretty much be over this week itself. But just a couple of stocks which have been dragging us lower. So while on Friday it was HDFC Twins, HDFC Bank, it was IndusInd Bank, and then Federal Bank as well, which reacted very sharply and negatively at that to its earnings. We're going to be chatting with the management as well at some point today. Almost a 9% plunge is what that stock saw, although right now it's recovering about 1% as we speak. And then Manappuram, of course, after those ED searches being conducted at the CEO's residence as well as the official premises, the first rates haven't trickled in, but this was a sharp downtick of about almost 12% that the stock saw in Friday's session. Good gains though for Titan, for Ambuja, for MRF, TVS Motors, Chola Finance. So let's see whether that trade continues today as well or not. Kunal, you think the entire tire space would still be a buzz? They had an excellent last week, this week too.
Well, I would suggest that I would sense some profit booking has to eventually come in because, when the market gets into a bit of a risk-off mode, it's bound to be that the sectors and the stocks which have done exceptionally well, there is, some sort of profit booking which happens into these spaces. But that doesn't, take away with the kind of very strong recovery, almost like a V-shaped vertical, rally for many of the tire names, specifically the likes of MRF, which I think is at just about, that 98,000 plus mark. Apollo Tyres has done exceptionally well. The only stock which has actually underperformed is Balkrishna Tyres in the entire space.
All right, a minute to go, approximately a minute to go. We've consolidated, but I think we are not done with the gains. That's my sense. The setup is very simple. FIIs are back. Global cues are stable. You may not be in for a great start, but I think the inertia of the market is clearly tilted towards going long. In the mid and the small cap space, the FOMO has just about kicked in. On the global front, now there is a universal acceptance that those who went to China at the beginning of the year, they're thinking, they're regretting, and they're coming back to India. Large flows went into China because Chinese markets were cheap. But those flows are now automatically coming back into India because Indian markets are giving you growth. Cheap versus no growth. Decently, fairly priced versus high growth, always go for the latter. That's what Buffett always says. And that's what I think global managers are doing right now. A minute to 10 seconds to go. I'll let the ball do all the talking. It's not going to be a big week in terms of news flow. But the first rates, Monday morning on your screen, 45 points higher for the Nifty, 150 points higher for the Sensex. IndusInd Bank, Maruti, Hindalco, Hero MotoCorp. Not too many companies came with numbers over the weekend, but the ones which came out with numbers, two. IndusInd Bank had to bounce back because the market reaction, I think, frankly, was overdone on Friday. Britannia is the one where numbers have been strong, commentary has been decent, margin expansion has been decent. Paytm, now it's flying. They continue to deliver, they continue to promise that we are very clear that we will be like any other company which focuses on cash flow. And the growth, I think, is just organic. I mean, they are they are not at the cusp of a high growth, but they are now really demonstrating that what this engine can actually do. 29 rupees higher for Paytm, 718 rupees. Let's also look at Zomato, Marico. Zomato, why? Because over the weekend, a lot of social media was talking about the impact of ONDC on food delivery, so I think that's having an impact on the stock per se, which is at 64 rupees. And then HDFC Bank and HDFC Limited, the real whipping balls on Friday because of the Morgan Stanley implication, because MSCI implication, I beg your pardon. 10 rupees higher for HDFC Bank, which is bouncing back, and for HDFC Limited, post numbers, the bounce back I think is slightly better.
Let's see what IndusInd Bank is up to, because the market was a little spooked about that move on the stock price yesterday, or rather on Friday. R. Mayappan has resigned as the CRO and Sachin Palange has been appointed as the COO. IndusInd Bank has seen a massive recovery this morning, almost headed in for a 4% gain. Britannia, the big stellar performer in terms of earnings, the margins have come in at almost touching 20%, managed to post a good beat, 1.5% higher for Britannia as we speak right now. Marico as well came out with its numbers, which have largely been in line. The domestic volume growth stands at 5%. So it seems like it was a very Dabur specific story, because it clearly hasn't rubbed off onto Marico, which would be, I guess, the closest peer. Marico has gapped up 8.25% as we speak right now in trade. There's ICICI Lombard, there's Paytm, there's DCB Bank, Sundaram Clayton. They've all come out with their numbers, so look out for all of them. As has DCB Bank, by the way, wherein the NIMs have come in at a 22-quarter high. The operating profit is up 26% on a sequential basis. DCB Bank gaps up 5% as we speak this morning. There's also Star Health. The market share has come in higher by 21 basis points. The April premiums have come in higher by 25%. 605 is where that stock stands. And then, of course, there's Ather Industries as well. We just highlighted the numbers to you. The revenue has come in higher by 25%. Margins as well have seen a fair amount of expansion. Ather is holding up now around that 1,000 rupee per share mark. There's Lupin also, which has made a small acquisition of about 165 odd crore rupees. There's Thermax. They won a 272 crore rupee order, so look out for that stock as well and what it does in trade. And then, of course, there's Dhampo Sugars as well, which has come out with a decent set of numbers. So that's another stock which is in focus also this morning. US FDA has now said that Mohali unit for Sun Pharma is not operating in line with the consent decree. So my sense is there would be a negative reaction on Sun Pharma this morning, down 1% as we speak right now. Coal India came out with its numbers. The blended realizations have come in higher, but the EBITDA has come in much lower than what the street was anticipating, 2.5% lower for Coal India as we speak. There's Piramal Enterprises, which has come out with its numbers. Adani Gas, Adani Transport as well in focus. MSCI looking to reduce the free float in May review meeting. And a couple of other numbers. Alembic Pharma, New India Assurance, Tattva Chintan, they've all come out with a bit of a disappointing set of earnings. But where is the index settling in at? Not seeing a bad move actually, about a 0.5% uptick and a very stock-specific result-oriented take on it.
I think it's an okay day for the indices. At least we've recuperated on the Nifty and the Bank Nifty by margin of 30-40% approximately from what we lost on in terms of the respective gains. The stock which I would look to trade in the open would be on the mid-cap front in Havells. I think it's a very strong chart. The last 3 or 4 days, the stock has done exceptionally well, moved from 1200 to now nudging towards the 1300 mark. So it looks attractive for at least another 80 to 100 points on the upside over the near term.
Naresh, let's find out what's looking attractive according to you as well, as we're checking in on the first rates at around 18,160.
So that would be a buy on Ambuja Cements. The stock is sustaining above the 400 mark. Has an upside towards 440 as a trade, keeping a strict stop loss at 390.
Mark, RVNL, that's just been this crazy stock of last 1 month. And today it's falling prey to some correction. 142 suddenly has become 136. So RVNL is on a decline. And before I look at intraday decline, last 1 month, one low, 85% higher. 85% higher for RVNL. They become Navratna, that's about it. But there are crazy moves which are there in some of these, the railway stocks now. What was like an ugly duckling now suddenly is trading at a Humpty Dumpty valuation. Year and a half ago, everybody thought defense is the only way, railways will not do well. But allocations for railway, every budget has gone higher. But some of these companies again run projects which are long gestation project, which is that you get the order right now, so the order book will look bloated. But the execution timeline for some of these railway companies is that 3, 4, 5 years. RVNL does get a lot of business from consultancy, but that's also a long gestation project. So you got to just be slightly careful. The long-term picture for railways defense is great, but 75%, 80% higher in the last 1 month, you could ask yourself, wow, Because when these stocks will reverse and they are not institutional dominated stock, you will see them, the fall will be higher than the rise. That much I can guarantee. I'm going to change gears and connect to Rajiv Thakur, CIO with